Hi there, welcome to Kneppy Invest and welcome to September 26, 2024. We have about 1 hour and 45 minutes left of trading today. And all I'm seeing is green, green, green on the ASX today, particularly when it comes to small caps and tech. In fact, all tech is up 1.83%. I will discuss why we've had a pretty good day today, particularly when the Dow Jones Industrial was actually down at 0.7%. So a bit of I won't say dislocation there, but something happened today that has caused a bit of a rally, not only on the ASX, but also in the Asian markets. So I'll discuss that first in today's video. But before we do that, what is the agenda in today's video? Well, we'll do exactly what I said, talk about what has been driving ASX today, have a look at a few tweets, haven't done that for a while. Then we get into the ASX today, looking at the best and worst performing sectors, indices, and also companies. And then we'll go through the top 5 stocks of the day. I did have to dig a little bit deep to get number 5, but the other 4 companies, in fact, coming in number 2 is actually 2 companies, but these 2 companies are sort of related, so I didn't really want to split them, and you understand why I didn't split them when we get to that portion of the video. But I really had to dig deep for number 5, and I have come up with a company that is quite unique in what they do and what they call themselves. And then I have a look at some of your comments. So let's get stuck into today. Pretty good at the markets. XJO is up 0.82%. Now, last night, I think I've mentioned this, Dow Jones down 0.7%. NASDAQ only up 0.14%. So what has driven our markets today? Well, it can be argued it started with a company called Micron. Micron Technology released their results after the markets had closed in the United States, and the results were pretty good. In fact, in aftermarket trading, Micron Technology is up, I'm going to say 16% after hours. Now, I am a shareholder of this company, by the way, so I do follow this company a little bit more closely than other companies. Yeah, in aftermarket trading, it's up 17%, and this is on better than expected results. And I went to Trading Economics, and they actually said Asian markets rise on chip boost because Hang Seng is up about 2%. Nikkei is up about 2%. Our market is up about 1%. So this particular little article from Trading Economics just mentions Asian equity markets rebounded on Thursday, with semiconductor and related stocks leading the gains as an upbeat quarterly report from US chip firm Micron Technology lifted market sentiment towards the sector. Japanese tech giants such as Tokyo Electron, Disco, and Adventist led the charge, along with South Korea's Samsung Electronics and SK Hynix. I actually, as I look at this website more and more, I actually do like it. US new home sales dropped less than expected. US crude oil inventories fall the most in 3 weeks, and oil stabilizes on US crude drawdown. It was just mentioned here, that crude oil futures stabilized around $69.70 per barrel on Thursday after nearly a 3% drop in the previous session. NASDAQ 100 futures gain as chip stocks jump. NASDAQ 100 futures rose 0.4% on the back of Micron Technology. So that is what's been driving our market. This one report and maybe a few other things thrown in there as well. But again, thanks to semiconductors, AI, and all that jazz. Anyway, let's get to the 2 tweets. Yeah, 2 tweets I have to show you. A couple of relevant tweets, in my opinion. Well, actually, one relevant tweet, and the other tweet, this guy, Spencer Hackerman, uses some language here I've never heard of before. Just got quoted with a 4 handle on a home mortgage. 4. Oh boy, is the economy going to catch fire in 2025? It's like, what the hell does handle mean? 4 handle, does that mean 4%? And handle is just some new terminology or lingo that I've just never seen before. And thankfully, someone else mentioned here, where is it? Dr. Retard, and maybe that's relevant. Is this a rad new way to say 4% interest rate, or am I retarded? And he did get quite a few replies saying, yeah, this is some sort of, actually, there was, they weren't kind to the original poster. For instance, only douchebags talk like this, so it's actually a good sign that he didn't understand it immediately. Okay, I'll just say I'm not cool. And also, Dr. Retard also mentioned sub 5 would be such a cooler way of saying it, and I actually agree with it. Four handle sounds like calling four in golf or something. Yeah. Anyway, that was an interesting tweet about some new terminology. He does look fairly young. Founder of Tulu Capital Management, so he's doing a much better job in life than I am. Anyway, there was another interesting tweet from Jessica Amy, who's something to do with Moo. I think it's Moo. I think she has something to do with Moo. Where does it say what she does here? Employed at training app Moo. Yeah. And she just mentioned here why to not be fooled by Australian inflation cooling is expected to 2.7% from 3.5% amid electricity subsidies. And she's got some proof for this. So electricity subsidies, where is it? Yeah, negative 17.9%. But there's some other significant changes here. Fruit and veggies up 9.6%. Tobacco 13.4%. Thankfully, I don't smoke. Rents 6.8%. Health 5.3%. Insurance and financial services up 6.2%. And something else was down here. Oh, fuel, automotive fuel, down 7.6%. So the reason why inflation fell a little bit is because of electricity, and which was helped by the government, and also automotive fuel. And we are thankful for that. And in fact, that can help us moving forward. But if we see a significant rise in oil, that would not help us. So we need to see decreasing rents, decreasing insurance, and hopefully insurance companies will come to play there, because at this point in time, insurance premiums is rising through the roof. Anyway, so when you do see numbers like, was it 2.7%, it's a little bit more complex than saying, well, things are moving in the right direction. Not absolutely. The government did help. That's what she's probably saying there. Okay, so let's get to the ASX Today. And that's not the right one. I'm going to get rid of that. This is the ASX Today. And we'll have a look at the sectors, indices, and then we'll go in the best performing and worst performing companies. Okay, so pretty good day in the markets today. In fact, all sectors are up, ranging from 2.11% up for discretionary and 0.46% for materials and financials. So remember yesterday, in fact, the last few days, materials have had a pretty good day, financials not. So a little bit of rebound in financials, but discretionary, telecommunications, IT, utilities, staples, healthcare, all up by over 1%. More than likely, all of our, I shouldn't say all, more than likely, most of our portfolios have done fairly well today. And I had a quick look at performance of my portfolio, and it's up a fair bit. And that main reason is because all sectors are up. Even the worst performing sectors are still up by almost 0.5%. I'm just going to have a quick look at ASX 20, just to give us a bit of a better feel if any subsector has done badly. So what I'm thinking of is maybe iron ore. Maybe iron ore has pulled back. So let's have a look at this ASX 20 today. In fact, 5 companies within the ASX 20 are down today. And they include Woodside, Westpac, Transurban, BHP, and CBA. So a nice group of companies there, a diverse group of companies. There's no real focus. So BHP is the only iron ore company there. A couple of banks in there. So even though financials is up, we do see still a little bit of weakness in the banks, and an energy company, a gas company down as well. And the best performing companies today, REA Group. I have a feeling, and I could be completely wrong here, REA Group might have released something today. They are going through this attempted takeover of, what's it called, Right Mover. And I wonder if this, REA Group to strengthen partnership with Athena Home Loans. So I think they bought more shares in that company. So there is potential that the only reason REA Group is up 3.44% is because just overall bullishness in the sector. Aristocrats up well. So WiseTech also up. So again, tech doing very well today. Anyway, so nice group of companies there. CSL's finally had a bit of a bounce. Okay, so let's get to the best and worst performing companies on the ASX today. We'll start with the top gainers. So here we go through looking at this via a percentage change. And I'm just looking for any sort of significant movement on pretty good turnover. So I'm just filtering out any company that has moved on a fairly low turnover like UEM. up 22% on $4,330 traded. Now, what I typically look at is turnover greater than 100,000, and we actually see quite a bit of that today. Jervois Global up 27.727%. Share price is fairly low. Neo Metals as well. We also have Titomic. I'm pretty sure Titomic did release an announcement today. I wouldn't say I'm following this company all too closely, but I am intrigued by what this company is doing. And they made the first sale of a D623 in Australia. I have no idea what a D623 is, so let's have a look. $174,000, so it's fairly small in terms of money. And next generation, one of the next generation of Titomic's portable cold spray systems. There you go. So market has liked that, understandably so. Nice turnover there as well. And then we also have companies like Premium One Lithium, Toro Energy, Australian Gold and Copper, Comply FinTech, and also Novonix. I have a quick look at Novonix because the turnover there is 1.9 million. But I have a feeling a lot of these companies are just either bouncing because it's a pretty good day today, or it's just a bit of noise. And here we see Novonix has moved 14.4% higher on no news flow. So I would say that is a bit of either a bounce or a little bit of noise. Let's have a look at the chart for Novonix just to see. And so share price is in a downtrend. And yeah, it's just a little bit of a bounce. In fact, the share price is just coming off the long-term low. Okay, so let's move on and let's have a look at the market cap or the list of the top gainers by market cap and any interesting companies here. Well, Brickworks is in my top 5 stocks of the day, so we can move on from that. Zipco share price in a beautiful uptrend. Paladin Energy, so maybe another good day for uranium. Yes, I can see other uranium companies here, including Bannerman, Lotus Resources, Mesoblast, Drone Shield, PYC Therapeutics, Strike Energy. I'm not seeing any of these companies. I don't remember any of these companies releasing an announcement today. I could be wrong. I might have missed it. St. Barbara, beautiful looking chart. Layside Studios has been a downtrend, so I'm assuming that's a little bit of a bounce. And then we're getting to some smaller companies, down to Empire Energy, Demerix, and Alligator Energy, Berkeley Energia, WIA Gold, and Arovella Therapeutics. Okay, so intrigued that Brickworks is in that list. Sol Patterson is not, because there is a relationship between those two companies, Brickworks and Sol Pats, across ownership. So it seems like the market did like Brickworks' results. And it's interesting because I'm pretty sure Brickworks did announce a loss for the year. Okay, let's get to the top losers. And we'll start off with by percentage change. And coming in number 1 is a company called Rimfire Pacific Energy, down 32.91%. It's a little bit of noise out there. Anyway, Rimfire Pacific Mining, it's a little bit distracting too. Rimfire Pacific Mining, down 32.91% on $921,000 of turnover. In the last year, this company has increased 783%. Just going to have a quick look to see if this company did release anything. I have a feeling they did. Yes. Termination. You don't ever want to see the word termination in the title of an announcement. Typically, when you see the word termination, it's not going to be good. I'm trying to think of instance where it could be good, but I can't think of that. So termination of 5-field project earning and funding update, and then restatement to quotation. So they were suspended for a little bit. So they went into training halt on the 6th, were in suspension on the 10th, and they've finally been lifted because of this termination of 5-field project, and that's why the share price is down. Let's have a quick look at the chart. And because the share price is up a fair bit over the past year, is probably going to be a pretty good looking chart. Yeah, this is a pretty good looking chart. Has finally seen a little bit of weakness. In fact, the last 2 trading days, and previous today was the 5th of September, the last 2 trading days have seen pretty big volume, and the share price has fallen a fair bit from 8.5 cents to 5.1 cents. Doesn't necessarily mean the end is in for the uptrend, but it's looking a little bit weaker than it has for a while. So Rimfire, in fact, has rallied from below 1 cent all the way to 8 cents. So definitely, if you've been in this for the last 9 months, 10 months, you've done a good job. You've had a good time until maybe today. Most other companies on this list, I'd say fairly small companies. Until we get to Satire, I'd say that's a little bit of profit taking. Share price rallied a fair bit the other day, down 15.68%. Maybe shorters getting back into Satire. Just going to have a quick look at the chart for this company. Satire. So yeah, 2 down days in a row. So share price closed on what day did it rally? Was that Tuesday? Yeah. Share price closed at about $2.40. Yeah, 2.38. Now it's $1.85. So a lot of selling has come in. And to be honest with you, this is sort of situation I would not trade. Even though share price rally like this, it's not necessarily good financial news. I'm looking for good financial news. This was not good financial news. Their annual report was just signed off by the auditor, and I think a lot of this rally in the share price was just a short squeeze. And when I do see that happen, I'm usually not that interested, and this is the reason why. You can see the share price pull back a fair bit. Anyway, so let's move on. Anything else of interest here? Nothing much. Again, fairly low turnover here compared to the best performing companies where we did see fairly good turnover. Here it's mostly low turnover apart from Rimfire, Pacific and Satire. And yeah, there's nothing here. Okay, let's have a look at the top losers by market cap. Austal, Satire. Not sure what's happening with Austal. That could be just a bit of noise. Serco, low turnover there. Step One Clothing. Okay, I will discuss Step One Clothing and why the share price is down 9.6%. It did make it into my top 5 stocks of the day. So wait out for that in a second or so. And unless you consider Alcidian worth it, not yet. Not for me at this point in time. Alcidian, I think that movement, 5% down, is a little bit of noise. Yeah, fairly low turnover, I suppose. Yeah. Okay. So let's get to the top 5 stocks of the day. And coming in at number 5 is a company, I did have to really dig deep for this one. And this company is called Vinyl Group. It used to be called something differently, and then they changed the name. And they've really diversified with what they're doing over the past maybe year or 2 years. Because when I first had a look at this company, I think it was called Jaxsta, Jaxsta, and then they started acquiring other companies. Because when I first looked at it, when it was called Jaxsta, I was like, oh, no, I want to stay well away from this company. Anyway, they've made another acquisition, acquiring something called Funkified, which is an interesting name in itself. Maybe that's why I included it in the top 5, just because of what they've acquired. So acquiring Funkified Entertainment for $2.5 million, financial year 24 turnover of $4 million, and EBITDA profitable. This is an end-to-end events and brand activations business founded in 2009. It has served as the Bragg Media's in-house events arm since 2021. Now, Vinyl call themselves Australia's only ASX-listed music company. In fact, when I did a little bit of research on this company when they was known as Jackstar, yeah, that's what I thought of this company as a music company. I'm just going to go back and have a look at some of the acquisitions they have made via Market Index. Just the announcements here. Here we are. In fact, only 22 days ago, 3 weeks ago, they completed another acquisition of Media Week. And I'm sure if we go back further, you're going to see a lot of acquisition notices from this company. Not yet, but a couple of raisings, or one capital raising there. Jessica Hunter promoted to head of the Bragg Media. Vampire shares to be released from escrow. Song Trader increases investment in Vinyl Group. Realize Holdings to convert note into Vinyl Group stock. So there is a lot going on in this company. I'm just going to go back to, in fact, I'll go back to the most recent Appendix 4C just to see if this company is close to being operating cash flow positive. Now, there it is. They released 2 here. That's interesting. I think one is a report and one might be, and of course, ComSec is going to take ages to open up. This is not surprising because before I started recording, I went to see or look at the announcements that had been released since 10 a.m. and it took ages just for that to open up. So it's not surprising this is taking an eternity. And let's have a look. So cash receipts in the last quarter, 2.564 million, and the company is not quite operating cash flow positive, not not only in the quarter, but also for the year to date. So has a little bit to go before this company will probably trigger onto my or any of my watch list. Now let's have a look at the chart for Vinyl Group. And chart doesn't look too bad, actually. If you go back all the way to start of 2023, share price actually been in an uptrend since then. It's actually more than doubled. There was a little bit of interest in this company back between about March and May. Share price actually rose to 18 cents and has pulled back. So this is not a bad looking chart. So seems like maybe these acquisitions the company has been making over the past few years, the market has liked it because look at the chart. Now, the question becomes, now, this is good because the share price has been increasing, but I would say the market cap of this company is significantly high. So it's $99 million now. I'm pretty sure when I first looked at this company as Jackstar, it probably had a market cap of like $4 billion or something really, really low because it didn't have much going for it. So the management of this company made the decision that they need to acquire. They need to acquire to achieve any sort of growth. And that's what they've done. Shares on issue now 1 billion, and that's probably increased significantly over the last few years because of these acquisitions. But it seems to be working for the company. Markup 99 million. But they still have to prove that these acquisitions are going to be fruitful, not only for the company, but also for shareholders, because ultimately that is what shareholders want. They want to see cash flow. They want to see profit. That's what they want to see. And Vinyl Group has to prove that to not only us, but also the market. I suppose we can be called market, not the market, a part of the market. Okay, so that's Vinyl Group coming in at number 5. Coming in number 4. Okay, this one is interesting. This is a company I do own, Brookside Energy. Looks like the share price has finally got above 1 cent. So I don't buy companies when the share price gets above or below 1 cent. I actually did buy some shares in this company at 1 cent. That's it. No more below 1 cent. Now, fairly good turnover today, 25 million shares. And they did release an announcement where I thought the share price might rally. So they have this well now in production, FMDP, oil and gas sales commenced. Now, if this company achieves their goals, this company is cheap. This sounded really good. So commercial production sales established during early flowback operations for all 4 wells. Early production rates are very encouraging, with the wells producing into fully operational production facilities. Significant volumes of oil and gas have already been sold. They also provided this, this sort of production profile. I like this production profile. So again, if this company can achieve their goals, this company is pretty cheap right now. They also, somewhere in here, show you that, yeah. So this is over the next, say, 4 years. The production is going to significantly increase. Now, they also included some little bit of, I wouldn't say financials. Here we go. Here it is. Okay, so the FMD is forecast to produce a fair bit of BOE net to Brookside in the first year of operation, with average production boosted to 2,300 BOE PD net to Brookside and revenue of $70 million in financial year 25, net income of 26.6 million. Revenue of the life of the well is projected to be 164 million, with net income of 58 million from 2.1 million barrels of, what's BOE stand for? BOE is barrels of, BOE, barrels. I assuming it was barrels, but then I was like, BOE, oil. Barrels of oil equivalent. Yeah, barrels of oil equivalent. Anyway, so let's go back to that announcement. Of course, there we go. Yep. So if they can achieve these goals, and if oil can remain where it is now or even increase, I think this company should be gushing in cash flow over the next few years. But it just shows you how sentiment can be, I wouldn't say harmful to the share price, but how negative sentiment can put a cap on the share price of a company. Because I have been to Hot Copper looking at the sentiment in this company just among Hot Copper posters, because this company is quite popular there. And they're fairly negative about this company and the management. And I think some of that negativity is just because the share price hasn't gone on a rally. And one of the reasons I think the share price hasn't gone on a rally is because there's just pip traders in this, those who are just looking for the share price to move by 0.1 cents. because if the share price is 1 cent, and if it goes up to 1.1 cents, that's an automatic 10% rise in share price. Anyway, so share price not in an uptrend or anything like that. I just think there is potential this company is cheap at current valuations. Okay, so it's coming in number 4. We have Brookside. Number 3, we have Step One down 9.33%. Share price did get as low as 163 this morning. And I was thinking about putting a bid in to buy some more shares at 163. Now, the reason why the share price is down is not the reason, or not a reason I would sell shares. The CEO has sold some of his shares. I think not only the CEO, I'm pretty sure there was someone else who also sold some shares. Just take your time, Comsec. So Mr. Greg Taylor, founder and CEO, has agreed to sell down 16.6 million fully paid ordinary shares in the company, representing approximately 8.97% of its issued capital. Mr. Michael Reddy, Director and Chief Legal Officer, has agreed to sell down 2 million fully paid ordinary shares. And the price, not a surprise, they sold it at $1.70. Now, Greg Taylor still maintains or retains about 57.91% ownership. So there is definitely skin in the game when it comes to Greg Taylor. So even though he sold a little bit of shares, there's still skin in the game. And to be honest with you, I can't blame him. He's led this company from the start. He's made a fair bit of money. And why not realize a bit of profit? Maybe he wants to buy a yacht or a house, or maybe he wants to buy an island off the Australian coast. Who knows? He can do whatever he wants with that money. He's well deserved it. But people do get a little bit nervous or wary because they believe, well, he's selling some shares. He must know something negative about the company. And that's why the share price sells off. But that's not necessarily true. And I actually did do some research about this about 10 years ago. Anyway, I do sometimes like to see why they sell, because a lot of times they will give reason. And probably the most famous case was Blackmore guy. Was his first name Maurice Blackmore, something like that, who sold some shares when Blackmore's share price was like $20. And this was just before the share price of Blackmore's went to over $200. Yes, he missed a 10-bagger by selling shares. So just because they sell doesn't necessarily mean bad things are in store for the company. But he sold some shares to buy a yacht. I mean, he said it. I want to buy a yacht. Other CEOs, founders, directors sell shares because they're going through a divorce. A lot of times you will see because of tax reasons and that sort of thing. So, anyway, so why are they selling shares? The decision to sell, this is the last part of the second last paragraph. In fact, the last paragraph. The decision to sell was driven by strong investor demand. So does that mean investors were demanding him to sell? And enhances liquidity and free float, broadening the share register. Not sure if I actually believe that. Not sure if it actually enhances liquidity. There was enough liquidity, in my opinion, when it comes to this company. I do actually agree with the free float broadening the share register. I actually do think, because 57.91% is still high. And he would have had, what would have been 66% of the company before he sold his shares. So that is fairly high for a founder and CEO to be owning shares in a company that he started. I still think that is fairly high. So no complaints there with that sort of reasoning. Strong diversity demand, enhances liquidity. No, he could have just said, I want to buy a yacht. And I would have been fine with that. Anyway, so you can just see how the market reacts to this. If Greg Taylor thinks this company is worth $1.70 a share, I'm going to think it's worth $1.70 a share, and it's now at $1.70. And I was thinking of buying some shares, but I'm still undecided just yet. Now, the chart doesn't look that bad, and falling to $1.70 isn't like a breakdown from anything. It's nothing to be concerned about. Share price is still in a nice little uptrend. In fact, the share price was this low 2 or 3 weeks ago. So no reason. Good volume, pretty big volume coming in. So when I say good volume, I don't mean it's good versus bad. I mean it's high volume. So maybe I should make that distinguishment. When it's high volume, just say high instead of good. Anyway, so because a lot of times high volume may not be good, could be bad. Anyway, I'm just going to just do something very quickly here. Relationship between directors selling and share price performance. So I did this research many years ago, and it was mostly American shares. But there has been research done on this, and there's no link between director selling and long-term performance of the share price. In the short term, there is a bit of a link. Now, that's sort of a broad answer, but if you get a group of directors selling at the same time and what they're selling is a fair or large amount of shares, that can be a signal. That can be a signal. And a classic case of this in Australia or on the ASX was A2 Milk about 4 years ago, when all directors sold a large amount of shares at the same time, and that was near the peak or just after the peak in the share price. Anyway, so typically what I'm looking for here is any sort of research like directors' trades, profitability, and market efficiency, which was released in 2023. Anyway, I won't do this now, but what I'm looking for is peer-reviewed journal articles that are looking at this particular question, because maybe over the last 10 years it has changed. Now, there is a link between directors or insiders buying and share price performance. There is a link. So when you do see directors buying, that can be a good sign moving forward. Not necessarily an absolute sign, but it can be a good sign. But just don't get fooled that you see a director selling that's necessarily a bad sign for the company. In the short term, yes, but in the long term, maybe not. Okay, so that's step one, clothing. Now let's move on to two companies that released results today. Soul Pattinson. And these companies release their results at exactly the same time because they are linked, forever linked. They own across ownership. So WH Soul Pattinson and Brickworks. I have not had a look at WH Soul Pattinson. Had a very quick look at Brickworks. And which one did I look at? I think I looked at the media release. And just I can't open up anything that's long because it's going to take a year to open up. And this is what I looked at because there was a table, and I love tables. Okay, so you could have been fooled today if you looked at this particular table and went, "Oh, I have to sell my shares. This has been an absolutely horrible financial performance from the company." But don't be fooled. And the reason behind that is property. Now, so you look at total revenue down 8%, underlying EBITDA down 80%, underlying profit down 88%, underlying statutory profit down 130%, and a negative. In fact, I did see an article, Brickworks makes a loss, share price rallies. Oh, what's going on there? Final dividend actually up 2%. Full-year dividend up 3%. But one of the reasons why there's a big decrease in profit is because of revaluation of property. And there was another table somewhere, I forget exactly where, and it went through all the different divisions in the company, and it just had property revaluations, negative 500 million. And that was the reason why. It might have been, wasn't that? No, it was this. Yeah, it was this 5-year summary. In fact, I love this particular 5-year summary. We can see how this company has performed in the last 5 years, not only the company or the whole company, but also their different divisions like Building Products Australia, Building Products North America, Property and Investments. And the main thing here, I thought it was property was down 500,000. It was only negative 109,000. So that's like a revaluation of property. Previous to that, the last 2 years, property had been revalued up 643 million and 505 million. I'm assuming that's million. Yeah, this year down 110 million. That really affected total EBITDA. So it went from 784 million to 157 million, and that also affected the profit. So don't have a look just at the profit, because if you just had a look at the profit, you go, oh my God, it's been an absolutely horrible year. Otherwise, Building Products Australia, up 2%. Just looking at EBITDA. Building Products North America up 9%. Investments down 13%. I wonder if that's have to do with they mentioned here. No, there's no depreciation or amortization within property or investments. There you go. Anyway, so the market's liked it. So there is potential that, and I haven't looked any deeper into these results. So there is potential that the results were better than expected, or any sort of outlook given by the company was good. Because when you see the share price up 8.14%, the market has liked something. I just don't know just what yet. And Capital Brief was no help. There we are. Brickworks swings to financial year loss to temporarily close plants. That sounds pretty negative, doesn't it? And maybe they've got something else here. And no. Soul Patts share rises on portfolio value growth. Oh, there we go. Brickworks shares rise despite swing to financial year loss. So you can just see that a lot of media journalists really focus on the profit or loss, and they're probably wondering, why is the share price down? Anyway, we might get some sort of context here because I actually have a context section, and there's actually nothing in that. The company noted that he's moving through a cyclical low in building activity with residential approvals at the lowest level for more than a decade. Okay, so that's Brickworks coming in at number 2. I suppose Soul Patterson should be there as well. Now let's get to the stock of the day. And the stock of the day is a company that is not trading. That company is Star Entertainment Group. 45 cents share price, or the shares are in a suspension right now. But they did release some very relevant, important announcements over the past, not quite 24 hours, the past 20 hours. The first one was last night at 7:28 p.m. New debt facility agreement. That's a fairly important announcement and a fairly good positive announcement for the company. Actually, I won't get into that. And then they also released their results. Now, the only one I read here was the media release, and they released these at 1:35 p.m. So I'm not sure when the shares will go back to being traded. But in the media release, they released their unaudited results plus a business update. I was most interested in the business update, and it was not positive. Okay, so revenue of 1.7 billion, EBITDA positive 175 million, but a loss, statutory net loss of 1.7 billion dollars, reflecting a non-cash impairment charge of 1.44 billion, arising from the impact of challenging trading conditions, as well as various recent and upcoming regulatory changes, which are expected to negatively impact the earnings of the business. Now, they talked about some of their, their projects or whatever, their assets, I suppose you can call them. The Star Brisbane has just opened up, phase opening from the 29th of August. Talking about liquidity and I remember here it is. No, I went way past it because I do remember reading about the outlook or trading conditions right now, and was not positive. So let's have a look at the 4th paragraph. Trading performance deteriorated over the second half of financial year 24, and this trend has continued into the beginning of financial year 25. That does not sound good. So management have to tell the truth here. If things have not moving in the right direction, they're in fact still going backwards, they have to say it. So don't be fooled by this belief out there that they're always going to be positive when they release financial results. No, you do get a sense of how a company is performing just by the language and just by the words they use. So it's pretty obvious here that things are not moving in the right direction just yet for Star. Things are still deteriorating, and who knows, maybe Star Brisbane will be the savior for this company. Anyway, that's probably all I needed to look at when it comes to Star. If we have a look at the chart for Star, it's looked negative for a while. It's looked negative for many, many years. In fact, it moved into a downtrend back in late 2021. So we're talking about 3 years ago. Share price at that point was $3.40. Now it's 45 cents. But I think if they can turn things around now, maybe not now, but share price would be near a low. Now, I would imagine when they do start trading again, share price will drop a fair bit. I wouldn't be surprised to see the share price drop below 35 cents. So keep that in mind. And by the way, I do have a very small trading position in this company, which has not worked out well at all, but very small because I was not confident in that trade. Okay, so that's the top 5 stocks of the day. Now, a few of your comments. And we'll start with this one. From James D, died in 1955. On Chris's Brown comment on 75,000 homeless in LA, many of them are too busy doing drugs instead of working. It is fair to blame society upon their own failures, not dissimilar to some of the people in this country living off welfare permanently and waste their life on alcoholism. Okay, so it's a complex issue. Now, just blaming drugs, I think, is not the direction to go down. And also just blaming the price of property is also not the direction to go down. But there is a link. there is a link, and I've done very small amount of research on this. Here we go. Homelessness and property prices. Here we go. And there's a really interesting, I did look at this earlier. And of course, it's not going to open up. That's going to open up. This is from Pew. I'm not sure. This is not a peer-reviewed article, but they do mention a large body of academic research has consistently found that homelessness in an area is driven by housing costs, whether expected in terms of rent-to-income ratios, price-income ratios, or home prices. So I remember reading this many years ago. That's why I actually did do a little bit of research earlier today. Anyway, there was a nice little figure one. Homelessness increased in areas where rents soared. And there's a clear link here. So we saw, or in the United States, there was a significant increase in homelessness in Sacramento, Fresno, Raleigh, Phoenix, Austin, and Tucson. There was a drop in homelessness in Minneapolis, Houston, Philadelphia, and Chicago. And then if you have a look at the percentage change in media rent, it was pretty obvious. Those locations there where there was a significant increase in rent had that increase in homeless, while those who had a fairly small increase in rent, much lower than the average in the United States, had an actually drop in homelessness. So this is from the US Department of Housing and Urban Development. So I think it's a very complex issue, and I think you can, or we can, try to hone in on one issue and say that's the problem, and completely miss that this is a complex issue. There's not one thing that is causing this. It's a wide range of things, but I think property prices, well documented that is one of the issues. And also believe drugs are also an issue. And I have no idea how to solve the drug issue. The war on drugs will never be won. There will always be drugs. So how do we deal with drugs? Fentanyl is an absolutely horrendous drug. And it seems like drugs are just getting worse and worse. Maybe there'll be a drug soon that you just look at it and you die. Anyways, fentanyl just... the worst thing about fentanyl is there are cases, a lot of cases, where people are taking something like a Xanax that's been laced with fentanyl and they just die. There's cases and cases of this, particularly affecting younger children teenagers who might buy that Xanax from someone online, and it's laced with fentanyl. And the reason they lace it with fentanyl is to get them hooked, because fentanyl is 50,000 times more potent than heroin or something ridiculous like that. Probably getting it wrong there, but it is an absolutely horrible drug. And I think if they can get these kids hooked on fentanyl, things open up and they will just make all this money. But the dose it takes to die from fentanyl is something ridiculous. I saw a picture of it once. Fentanyl lethal dose. Images. There it is. Yeah, there's this one. There's a penny. That's a lethal dose of fentanyl. That's it. And there's images here of lethal dose of heroin versus fentanyl. It's just minuscule. And there's another one. Yeah, I think there's this one here. Carfentanil, which is even less than fentanyl. And I have heard, this could be... Anyway, drugs have always been an issue, will always be an issue. I don't know how to solve it. Homelessness probably will always be an issue. But at least we do know that there is a link between homelessness and property prices, and rent and that sort of thing. And there must be a way around that. Must be a way we can help. Anyway, thank you for that comment. It's a good contrary point of view. I do like contrary points of view, but I think you're both right. Put it that way, you're both right. James then also said child birth rates stats in China have fallen off a cliff. Too bad for A2 milk. I'm wondering if China birth rates, I'm wondering if the government is going to do anything about that. I've also heard that it also depends on the year, that if there's like a year of the dragon, there's going to be an increased birth rates. But yeah, it's been falling. Now, there's no doubt about this. It's dropping like a rock. It's just dropping significantly. It's just year on year. It's just consistent drop in birth rates. And we have seen this through most of the world. Consistent drop in birth rates. And I wonder if there was a link, or there is a link between birth rates and the education level of women, and as education levels of women increases, birth rates actually do go down. So this is, this is an absolute. So I would assume that the education levels of women in China have increased a fair bit over the past 20, 30 years. And this could also be leading to decreasing birth rates. 5 points. We need, anyway, 1.18 children per woman. That's in 2022. And it's further fallen. It's fallen further since that. So the replacement rate is 2.1. 1.18. Korea's really bad. China's really bad. Anyway, yeah, so that is actually negative for A2 milk, yeah. House prices will revert to the mean when real interest rates revert to the mean. Come on, folks, not rocket science. And here you have Jim Chalmers calling for artificial rate cuts. Good luck to lower house prices. Not. Yes. Well, yeah. Well, I think again, house prices it's a complex issue, and definitely interest rates have something to do with it. But also believe that how we treat houses as investments has something to do with it as well. But I also believe the main issue is supply and how hard it is to get new supply onto the market. I think that's the main issue, supply. And if you have troubles with supply of housing, then demand is an issue as well. And when you increase your immigration by a significant amount, that's going to have effect on house prices. So in my opinion, the biggest reason we have higher or increasing house prices is because of supply and demand. So I think one of the worst things the government did was increase immigration into this country. Our housing could not handle it. But this has been an issue for the last 20 years. And one of the reasons why our infrastructure in the cities is really behind is because the federal government decided to increase immigration rates. And if I remember correctly, the state governments didn't really think it was going to happen. So we fell behind when it comes to infrastructure. So that's, I think, the biggest issue, immigration. Yeah, does seem like we may be on the right track there. I don't know. So in my opinion, it's immigration, supply of housing, and demand. So immigration is demand, supply of housing. It's hard to get new developments, that sort of thing. K23, thanks, Kneppy. Great as always. You're welcome. James Nicolay loves Mithril, silver and gold. Well, look at that. Had a really good day yesterday. Another good day. Up 24.6%. That's a beautiful looking chart for Mithril, silver and gold. Could you please do an update on GQG? So I am trading this company, and it was looking a little bit weak the other day, and I was thinking, oh, should I take my profits with GQG? But the share price has started to turn up again. So I'm starting to like this chart again. Share price got as low as 240, now it's back up to 290. A beautiful looking chart from start of 2024 all the way through to July. Company did release results, and the market was like ho-hum. I thought the results were pretty good. And then the share price actually fell below the low, and I thought, oh no, share price looks like it's trying to move into a downtrend, but the potential downtrend has come to an end. I think, I think there's no significant risk right now that the share price is moving to a downtrend. I'll just put a line right there. Yeah, I would have been concerned if the share price didn't rally in the last few days, but the share price has really rallied really good. So I have no intention of unwinding this trade just yet. That's all I'm going to talk about when it comes to GQG. But I do remember, I was impressed with their results. That's one thing I do remember. Crackerjack, can you please share your thoughts on Inghams and whether you think their price will rebound anytime soon? Now, just because I might think a certain way doesn't mean it's going to happen. The market's its own force. It's all about probability. Do I think the share price of Inghams has a chance, or what's the probability of it rebounding? And I look at this chart and I just think negatively about it. Now, the first thing I would say is I don't or will not consider Inghams to be a high-quality company. They released their results. The results were not good, and the share price has continued to tumble. So this is sort of the opposite of what we saw in Inghams' chart before. Share price in an uptrend between August last year and about February, so 6-month period where the share price rallied. Some of our research has shown that after a positive report. 6 months is sort of the average period. Maybe not the average, but that's what you could expect the share price to rally, the amount of time. And the company released something negative in February. Results. Again, results. And the share price has been under stress ever since then. Based off this chart, I wouldn't even think about buying or selling. In fact, I wouldn't be thinking about buying any shares in Inghams just yet. I would have, if I held shares in Inghams, I wouldn't have even been holding it before that big down day, but I probably would have sold not on the big down day, but a few days later, because there was no rebound in the next few days. And that, to me, is a negative signal. And you can see the problems. But have a look at the weekly chart as well. And when I look at this weekly chart, this is the telltale sign of a non-high quality company or a lower quality company. Share price is not in a long-term uptrend. This goes back to 2018. Share price is lower than when it listed back in late 2016. So it's Inghams. Yeah, so will the share price rebound? It could rebound tomorrow. The market forces, but probabilistically, I personally, I would not have even had a position in Inghams to sell. HBK Fortis, great video. You always touch on one stock that I'm curious about. Well, thank you. You're welcome. I'm curious about most stocks. Landy Lee, what websites do you use for stock research? Both paid and free. Stock research. Okay, so I will market index, that's free. Trading economics, that's free. I also use ThinChat. I do pay for this. I can't remember how much it is. This is a nice website. I've also paid Guru Focus in the past. That was a little bit more expensive. Ticker, TIKR, I've paid for that. And that's all I pay for. In fact, FinChat's the only thing I pay for. Yeah. And that's all I really need. You get a lot of information here. So if you go to, say, Apple, you have overview, financials, investor relations, which could be transcripts, presentations, that sort of thing, released from the company, estimates from analysis, ownership, inside ownership here, industry, so other companies within the industry, how they're doing, just comparison, dividends. You also have a modeling, which is sort of like a DCF, but a little bit more complex. And filings. So this would be financial results, that sort of thing. They call it a little bit different. So Form 8, Form 4. Let's go to CSL. So and I'm pretty sure most Australian companies have the same thing. Oh, no, they don't have filings here. Pretty sure they have investor relationships. Yeah, investor relations. So if you want to have a look at CSL's most recent results, maybe they've got slides here. Yep. So I do pay for that. That's the only thing I pay for. What else do I have here? I have other things, share site, earnings calendar. There's Guru Focus. FinViz, I haven't looked at that for a while. There's Ticker, Market Index, Trading View, Alpha Spread, haven't looked at that for a while, yeah. Capital Brief, yeah. Anyway. Thank you, Gizmo. Ruben has a little bit of insight about IDP education. They lost their monopoly English test in Canada. I do remember something about something negative happening in Canada, which opened up other competitors to enter the Canadian market. A lot of the international students favour PTE by Pearson as it is marked by computer or AI. Obviously, with the regulation on migration cap, that is also impacted on IDP earnings growth. Thank you for that information, Ruben. And I agree with your comments about property. Australia seems to be, that's from yesterday. I don't need to talk about that again. By the way, this Tsunami, I did not realize this was a mistake. Ooh, they were doing a test or something, and then it went out there into the real world. And the only reason I know that is because I went to look at the forecast the other day. So I just put in bomb. What the hell? So in Google, this doesn't seem like it's working here. Yeah, in Google, it gave me some, here we go, yeah. Gave me some top stories. Alarms app users with test Tsunami alert. And I was like, thousands of Aussies fooled by shock bomb warning. Did not know this happened. And I thought maybe there was a fake Tsunami warning at Port Douglas. But yeah, not a fake, but there maybe have been a real tsunami warning at Port Douglas, but no. Okay, so that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.